Mswatu ingosi thula akayithathe akahambe nayo akayithathe yedenza bakhe wone
Make better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
Right, and your time is exactly 2 p.m. This is the Wednesday broadcast of Nedbank Business Watch right here on Eswatini TV. I am Nosile Sitola alongside my co-host, Sifisa Ngamalo. We're glad that you could join us on the program this afternoon. Good, how are you?
Absolutely. And listen, I think the most exciting part is, for me personally, is just counting down the days to celebrating His Majesty's 40 years on the throne, which is happening exactly in 29 days in the Kingdom of Eswatini. And today on Nedbank Business Watch, we really just want to look at and reflect on this defining chapter in our economy as the Kingdom of Eswatini. Of course, His Majesty the King has championed investment drives. He's also championed as well a lot of infrastructure development in the Kingdom of Eswatini. So this afternoon, we want to get in conversation with our economist, Sanele Sibia, and just really, drill into how he really has done that with all the drives that we have seen in the Kingdom of Eswatini. We are seeing beautiful buildings. We are seeing job creation. Our GDP sitting at 4.8 billion emalangeni. We've transitioned into a lower middle income economy as a nation, and so many beautiful things that we really just want to reflect on. But most importantly, as His Majesty pronounced during his speech from the throne, the next 40 years should triple or quadruple everything that we have enjoyed over the past 40 years. And that calls for a lot of work, that calls for a lot of foresight, as well as a lot of strategic planning. We do not have anyone else other than our economist, Sanele Sibia, who's going to help us understand where we are coming from, how that informs the present, and how it should inform the future. As we say, that is our conversation today.
Also on the program, in our sit down with Nedbank today, we want to take you back to a conversation on overdrafts, which are now emerging as a critical or practical tool for those moments when you don't want to spend money, or you actually find yourself spending a little bit more than you actually want to. It could be the back to school season. It could be any time when you have to pay off a loan. Overdrafts, when used responsibly, they provide a reliable safety net. But how do you qualify? And most importantly, what are the benefits? Stay tuned to find out.
Yep, you're watching Nedbank Business Watch. It's 3 minutes after 2. We start the show per usual by looking at some of the business news that define today. Let's do that.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back. You're still watching Nedbank Business Watch, and moving on with the program, let's have a look at our business stories.
Well, first story looks at the ongoing conflict that is happening in the Middle East. Eswatini's economy faces pressure as the Middle East war threatens a decline in economic growth of between 0.3% to 1%. This is informed by regional linkages, and today the governor of the Central Bank of Eswatini highlights the potential impact, warning that prolonged conflict could slow economic growth. A longer war means deeper strain and greater risk. However, if the war is short-lived, the impact could be limited. Let's take a listen as the governor gives an insight on how the war could indeed influence monetary policy direction.
As an open economy that depends on imports, albeit our imports come via South Africa in the majority, but we know that due to this war, there are some channels that are going to impact us negatively. The first one is the inflationary channel. Because of the increasing price of oil, it is definite that it will consequentially lead to increases in prices. We know that oil is a major input into many manufacturing activities. And here at Eswatini, we've got mega projects that certainly require this kind of input. So definitely, this channel of inflationary increase is going to impact us. And again, when prices go up, it means cost of production goes up. And this will have a negative effect on economic growth. So that is another channel where we are going to experience a negative impact. Right now, we are looking at projected growth of about 4.8%. When running various simulations, they are indicating that if this war stays longer, it could result in about 0.7% reduction or even 1% reduction in economic growth. But if it is in a shorter period, we are looking at a possible reduction of about 0.3%. That is very, very significant for a small economy of our size. So this is one. The last one, which definitely has got consequence to us, is unemployment. Because of these factors which are negatively impacting growth, then it has the resultant effect of people losing jobs, which is very, very unfortunate. This country needs economic growth and needs job creation on a sustainable basis.
The Central Bank of Eswatini launched the Eswatini Payment Switch, EPS, in December of 2024, a national infrastructure project enabling real-time, 24/7 interoperable payments between banks and mobile money service providers. To date, 670,000 transactions have been processed, amounting to 2.7 billion emalangeni. This was shared by the Deputy Director of Operations Payment Systems, Sabelo Gama, at the Central Bank when asked about the progress of the payment switch.
The Eswatini Payment Switch Fast Payments module processes domestic payments below 50,000 emalangeni. This national initiative allows consumers to transfer money and make payments quickly and easily 24/7. Deputy Director Operations Payment Systems Sabelo Gama at the Central Bank of Eswatini shares the progress so far.
The payment switch has been operational for just over a year. With full participation being all financial institutions and mobile money service providers being on board for about 4 months now. We've processed 670,000, just over 670,000 transactions to the value of 2.7 billion emalangeni. So that's quite a significant number of transactions and value that has been moved.
He speaks to the challenges that existed before the Central Bank of Eswatini introduced the payment switch and how critical it is.
As Eswatini, we had quite a heavy reliance on partner institutions and countries to run a portion of our financial market. And in that regard, it means we could not always set the exact direction we wanted our industry to move in. So the payment switch is then forming a good base for us to be innovative, to be agile, and to set the path of our payment system. So we are certainly right at the beginning of the journey. So that's important to note. you will see as we add more things why it was important to set the base right.
All players, including banks, have now fully integrated into the Eswatini payment switch. Reporting, Nelson Ngamandla, Ezulwini.
And you're up to speed with some of the latest in business.
After the break, we speak to Sandelas B, our economist, as we reflect on the 40 years of His Majesty King Mswati III's defining leadership for Eswatini's economy. Stay with us. Welcome back. The Kingdom of Eswatini is celebrating a remarkable milestone. His Majesty King Mswati III has reigned for 40 years, and during this time, he has played a pivotal role in attracting foreign direct investment, in fostering entrepreneurship, and in opening numerous businesses across the nation. Today, economist Sandelas Bia joins us to unpack how these investments have transformed and uplifted the kingdom and its economy. But first, let's take a listen as the governor of the Central Bank of Eswatini details how His Majesty has influenced the country's monetary policy direction. He did mention that we are expecting that the Middle East war may impact the economy of the kingdom by 0.3 to 1%. Let's listen.
Under His Majesty King Mswati III, the Central Bank of Eswatini, Umjolo Maswati, has operated in a consistently stable political and policy environment. This continuity has allowed the bank to build institutional credibility, maintain policy independence in technical decisions, and execute long-term reforms without interference. His Majesty's support for the exchange rate peg within the common monetary area has been decisive. It has anchored monetary policy around price stability and discipline, limiting inflation, volatility, and ensuring external stability. This clarity has allowed the central bank to focus on liquidity management, banking supervision, and maintaining adequate reserves rather than frequently experiencing policy reversals. This has also aligned the country's inflation expectations, especially for businesses and households, which is key in promoting growth through investment. It is also under His Majesty's leadership that the central bank has acquired and started bolstering its reserves through gold. And we are pleased that this initiative has been guided by the insightful visionary leadership of their Majesties. His Majesty has reinforced a governance model that prioritizes institutional coordination, especially between fiscal authorities and the central bank, which is responsible for monetary policy. During SACU revenue shocks and global crises, this approach helped preserve financial sector stability and avoid systemic and non-systemic banking stress. His leadership has also reassured investors and depositors, preventing capital flight during uncertain periods. Under the leadership of His Majesty, Eswatini's monetary and financial landscape has been defined by a series of decisive milestones that have entrenched stability, credibility, and modernization. These include the steadfast adoption and defense of the Lilangeni exchange rate peg, which has anchored confidence in the national currency, the progressive strengthening of the banking sector, and the modernization of payments infrastructure. Equally significant has been the expansion of financial inclusion, which now stands at 87%, through the growth of mobile money wallets and the oversight of microfinance institutions, ensuring broader access to financial services for eMaswati. Collectively, these achievements have underpinned a stable, well-capitalized banking sector, free from systemic failures, and reflect His Majesty's enduring commitment to sound economic stewardship and institutional excellence.
All right, that's the Central Bank Governor there, Dr. Philip Nisi, just making reflections of some of the developments that the Kingdom has enjoyed, courtesy of His Majesty III's steadfast, exemplary, and very defining leadership. We connect with our economist, Sanele Sbia, now to just reflect now with an economist. Sanele, thank you so much for your time. We always appreciate your clear insights. It's a very, very momentous time for the Kingdom of Eswatini, as it has been for the past 40 years indeed. Perhaps let's premise our conversation on this very important transition of Eswatini transitioning into a lower middle income economy, with our GDP now sitting at 4.8 billion emalangeni. From your own perspective, how much of this structural transformation is attributed to His Majesty's policy direction as well as his reign?
Thank you, Mr. Ngumalo. A good afternoon to you, and also a good afternoon to the viewer. So I think one of the pivotal moments as His Majesty began his rule, and now we are going into the ruby years, was actually being, driving Eswatini to attaining that lower middle income status. And, that actually comes on the backdrop of a transformative agenda, because when His Majesty came into power in 1986, as the country was a highly agrarian society and industry was, just coming at its nascent stages, and then therefore, we saw this development and growth in the industry. And if you look at the number of companies that came into Eswatini immediately after His Majesty assumed the throne, because we had a young monarch coming into place and, a young sovereign, where people were looking at all of those potential reforms that were likely to be made to drive industry. And indeed, His Majesty did deliver on those reforms. So when you look into the coming years, we saw a lot of modernization of the economy, with industry taking over from agriculture as the main contributor of the economy. And then post the 1995 period to the present, we've seen, services, that the growth of the tertiary sector and the financial services sector. And then if you also look into the growth of the manufacturing sector, His Majesty commissioned the factory shells program, so that should have companies coming into a setup in Eswatini without having to incur the costs of building. So it was called an establish and operate type of operation, and it really did yield the returns that we are seeing. And if you look at what happened when we got to 2004, the 2000s, when we got adopted into the AGOA program, that's the African Growth and Opportunity Act program, what then happened there is at the peak of that in 2004, we saw that growth of the textile industry to a level where it employed over 40,000 eMaswati. And then if you look into where the industry is right now, even post-AGOA and even with the shrinkages, we've seen the industry sustaining over 22,000 jobs. So all of that is due to His Majesty's command to actually transform the economy into a first world economy. And the steps that we are taking towards that are quite pivotal. That is why we we moved into a lower middle income country. And when you talk of this fourfold growth, it is not growth that doesn't just come, that's nominal. It's actually real growth. The economy grew in real terms, and the economy grows in the midst of quite a number of regional tectonic shifts. You know, we saw the move when South Africa came into liberation that had an impact on the economy, but you know, through His Majesty's capable leadership, we're able to steer the economy to a more or less stable type of environment. And also, if you look at the fiscal space coming out of that, and His Majesty, when he took over the economy, again, we're at a situation where we're largely dependent on SACCO revenues. But now we talk of a situation where SACCO revenues account for only 30 to 40% of the country's national budget. You know, making sure that we are not vulnerable to those economic shocks. And we've seen industrialization being driven by huge infrastructure investments, which make Eswatini ready for business, Mr. Nxumalo. All those were capable, and you know, deliberate actions to bring Eswatini into a new era. And as we enter the Ruby Age, we do hope that it will come with even more innovations. We've heard His Majesty talk of you know, mega projects and establishing businesses with a turnover of over 10 billion per annum. And if we can deliver that as we go into the Diamond Jubilee, into the 50 years, again, now that's going to be quite impressive.
On investments, and of course, a lot of the conversation is always around investment inflows, and our conversation now is sitting on investment impact, right? His Majesty has been quite emphatic with his drive towards foreign direct investment. I think you and I did have conversations, especially a year and a half ago, around that FDI drive that Minister for Commerce, Industry and Trade would, go on as His Majesty the King always left the country, visiting multiple countries, just, speaking to multiple countries to come back home and plant their monies here. Let's talk about the industries that have really absorbed FDI the most, as well as how that has then translated into job creation and productivity gains.
So when we look at that, Nxumalo, I think for me that's where we've seen His Majesty actually working for Eswatini, because this economic diplomacy is not an easy feat. But in terms of the industries, we've seen the textile sector contributing most immensely from that sector, and also if you go back to 1987, we saw Conco establishing in Eswatini, and really just creating that regional giant right now, because over 20 African countries source their concentrates from Conco Eswatini. So it's quite a regional player. And then we've also seen just recently the incoming of Kellogg's Telegram together with Lush Products. Again, those are industry giants. And then if industry giants do choose to come into Eswatini, set up plant, and then from there engage in production, it's a sign that His Majesty's economic diplomacy and the strategies, including the factory shell strategy, are actually working. And then if you trace it back over the years, Mr. Nxumalo, you're going to see big words like Cadbury. There was a time when you ate a chocolate, it was Cadbury, and Cadbury found it, quite plausible to come and set up in Eswatini. And then you look at the Rhodes Food Group, and with the acquisition of, Swaziland Fruit Kernels, and then now became part of the Rhodes Food Group. Again, those indicators that Eswatini is open for business. So sectorially, Mr. Nxumalo, it would be the fact that we are seeing more of the food processing industries coming into place, and the textile industries anchoring that foreign direct investment. And before that, we saw in the agricultural space where we had, Sabi Usutu, even after when they closed, we were able to replace that with Montigny, which was now a local Liberal-grown company, which just shows the level of growth that the economy has seen during His Majesty's tenure as he enters his Ruby years. So yeah, there are quite a number of initiatives that we're seeing, and right now we're seeing His Majesty strive, pushing pushing towards more high value, investments. We were seeing the likes of the biometrics, the the technology park hosting quite a number of initiatives and international companies being open to that space. But historically, it's the agri sector and the textile sector that were major beneficiaries, and the food processing sector together with the agro processing.
Absolutely. Having enjoyed the FDI, if we were to pinpoint some of the top buzzwords from His Majesty's pronouncements, most recent pronouncements, those have been, and I suppose it links perfectly with, that transition from FDI to a growing concern around what the King always calls private sector-led economy, a very boisterous drive around entrepreneurship, as well as PPP. I want you to speak to me about, that emphasis on entrepreneurship that we always hear him talk about, as well as the private sector participation. Are we seeing a shift now toward a private sector-led economy here at home, or is growth still largely driven by government as well as public sector spending?
To answer that story, Mr. Ngumalo, I think we have to go back to 1987. Soon after His Majesty assumed office, we saw the setting up of the Swaziland Industrial Development Company, which was a private-public partnership, a joint venture between government and private financiers. So what we're seeing there is His Majesty, at the onset of his reign, he was positioning Eswatini for industrial transformation. So what we see is you need to strike a balance between for direct foreign investment, because at the nascent stages of growth, a country may not have the relevant, input and experience to actually drive its long-term growth. So what you need there is to bring in foreigners to then help you with setting up certain industries and then transferring those skills. So it does work, and then you track it through and see when as we established the Rural Development Fund, we established, the Youth Enterprise Fund, Inhlanyelo Fund, quite a number of funds, and we also established FinCorp, which is actually growing into quite a commendable player in industry, which is now competing with the banks and other big industries. So those are the commitments that His Majesty is making to his people to say, let us bridge the gap in access to finance and have you come into play and, make our business work. Because remember, FinCorp started as the 40 million fund. But now, if you look at the capitalization of FinCorp, it's quite a huge fund, and it has funded quite a number of Eswatini. So what we need to do is to continue on that track and make sure that we are able to get, Eswatini into business. And then we talk of private sector-led growth. I just mentioned the fact that we have Sabi Usud, we have Montigny. Now, that was an international company that was failing, supporting over, 600 jobs in the plant and more downstream. And when it closed, His Majesty gave the command that this is an industry that cannot fail. And then we see the likes of Montigny, and we see, the Public Service Pension Fund coming in to fund such industries. And when you look across the landscape in Eswatini, most of the sustainable industries are the ones that are homegrown, like Montigny. And then if you look at other homegrown industries, the Royal Swaziland Sugar and Sugar Corporation, we've seen that industry transition from preferable market access to having to compete with the likes of your Brazils, India, America, the big players in the industry in terms of the sugar market, and it continues to thrive to this day. So we can say that, yes, we're seeing foreign players coming into play, but local players are also coming into play. And I mean, right now we're talking of the Eswatini Building Society transitioning to a bank. So now that's a huge leap in strengthening local grown and homegrown sustainability in the finance sector. So in as much as we have ways to go, but the the progress is quite marked. And if you look at where we come from and where we are going, and the composition of industry, and right now we're talking of the Localization Act and the local investor roadmap. So that investor roadmap, what it does is it's now going to consider Eswatini as investors. That's also going to bolster private sector-led growth, and those are efforts that are happening under His Majesty's rule. And moving forward, we should get to a point where we are quite seeing a lot of companies, developing in Eswatini, because if you can then give local companies an incentive, you're allowing them to compete at an equal footing, and you are giving them this wiggle room to grow and learn while you lowering their costs one way or the other. So yes, we are on the right track, even though the legacy is such that a large portion of the growth is currently being driven by private sector. But when you move from the big companies and you look at the role that the SME sector is playing in Eswatini, now that's a sector that is highly indigenously owned. Around 80% are indigenously owned businesses. That sector contributes 50% to the country's GDP as per the estimates that we are getting from the World Bank and the UN bodies. So now that is the source of private sector-led growth, and that is what we need to nurture as a country to get to a point where they become big industries. And we've seen, SME guarantee schemes that the government has put in place just to try and bridge the gap and make sure that our SMEs have a cushion to fall on. And if you look at the transition from 2011 to 2017, we had around, I think, 3,000, 4,000 SMEs by 2011. 2017, we're sitting at 56,000, and then in 2023, we're sitting at 64,000 now. That is the growth that we can attribute to the efforts that His Majesty's government and under the leadership of His Majesty are actually doing to ensure that the economy moves forward.
Yeah, in your initial answer, you did speak on sustainability, and you pointed particularly towards the financing sector. And I really want us to stick on the topic of sustainability and debt, really, because public debt, the central bank says it is sitting at around 39% of our GDP, and that is just below the 50% threshold, right? Do you view Eswatini's debt position as sustainable in the long term, especially given the increasing reliance on external financing, particularly for infrastructure projects?
So the debt story, one of the things that we'd have to appreciate about His Majesty's efforts is, low middle income countries like Eswatini can actually push the envelope to 50% as per the confines and the dictates of the IMF. But what we're seeing with His Majesty's government is, that issue to say, let us control the debt. And His Majesty did command in his speech from the throne recently that Eswatini should move towards, containing the debt because it was getting out of hand. So yes, we are within sustainable regions, but we do need to get that double-digit growth as His Majesty commanded, in terms of saying, let us get to a point where the debt stabilizes and it begins to go down as a percentage of the GDP. So now what you're seeing there is His Majesty as a leader who is also concerned. We want to drive growth, but he does caution where he says things are about to go to go wrong. I think that is how, as a country, we have survived up to this far. We are always, blessed to have His Majesty's foresight in terms of where we need to drive the economy and how we need to push the economy, instead of being, ambitious and going for those huge capital projects without necessarily, being cautious of where we're going. So I do believe that now there's much that His Majesty has commanded. We are going to see the debt beginning to stabilize, and if we're able to pull in those growth figures, because remember when we started, His Majesty commanded his government to go out there and work and make sure that we're able to get to the growth levels of around 6, 7, 8%. that if we can do that, we are in a position to then have the debt stabilize such that you'd also then have scope to take on new debt with a debt level that is quite lower. So I think where we are going right now, Mr. Nxumalo, is a new chapter of Eswatini's economy where we are becoming more worried about growth. We are beginning to have a growth problem, not a debt problem, because if you're looking at the trajectory that the country is taking, I think implicitly we are saying if we can hit that growth target, then the debt is not a problem. But if we fail to hit that growth target, then the debt becomes a problem. That is why His Majesty actually commanded that his government and all the Maswati go out there and establish mega businesses around and over above the 10 billion Emalangeni threshold, because that is what we need right now as a country to accelerate the economy and move it forward so that we are at that level of sustainability.
Mr. Speaker, thank you so much for your insights. We always appreciate your time, and absolutely the growth conversation is the focus now, and it certainly will be the thing that is going to address the biggest problem in our economy right now, which is youth unemployment sitting at a very frightening 58%. Sanalus B, our economist. We go for a net break now. We'll be back shortly. Stay with us.
All right, so welcome back. You're still tuned in to Eswatini TV. This is Nedbank Business Watch. Thank you for staying with us. Dabula Dlamini from Nedbank. He's the team sales at Nedbank Manzini branch. He joins us today to talk more about Nedbank's smart financial tool, the overdraft. A very good afternoon, Nkosi. Welcome back. Thank you for coming through. So, yes, we're back again to talk about the overdraft account. What is an overdraft and how is it different from a traditional personal loan?
Good afternoon, Mtombeni. So thanks for the opportunity. May I take this opportunity to greet the viewers at home? And in terms of the overdraft facility, an overdraft facility is an opportunity which is extended to our client in terms of that they can be in a position that they can withdraw money that they don't have on their account. Yeah. So it's a facility that is extended to the client whereby the client can access more money than he has on the account. So it enables a client to utilize the funds without having the money, but he has an obligation that he has to pay back that funds.
Yeah, we know that, you know, as adults we go through financial demanding seasons, such as the back-to-school season. How is this tool useful in such, situations?
Okay, thank you for that question. The overdraft facility gives a client at home who has a family and who has children who are going to school to access fund. We take note that as a Nedbank, you find that clients have challenges when it comes to paying back the school fees and in terms of budgeting and all the other elements that is involved in budgeting. So if you find yourself out of budget, and then we are saying, instead of being stressed further, Nedbank is providing this solution to our clients, and we're saying they can come through so that we can offer them this opportunity where they can access the funds at Nedbank.
So is it only for short-term cash flow challenges and unexpected expenses?
Yes, we encourage for short-term challenges that we are experiencing, and we are looking at a situation that because it's a short-term loan in a way, which afford you to be awarded to you for over a period of 12 months. And within the 12 months, you can make a decision whether you clear it or you can even clear it on monthly basis. But it is a short-term, and it is designed to cover very, very challenging situation that we are experiencing, instead of being exposed to the other situations that you can't even find another funds to pay back the situation that we are experiencing at that point in time.
Okay, so what are the requirements and who is eligible to apply for an overdraft?
all clients from Nedbank are eligible to apply for an overdraft, and anyone who has a pay slip who get paid salaries through Nedbank can come through Nedbank and be assisted in terms of being awarded the overdraft facility.
Okay, so how does it work exactly? Do I need to have funds in my account, and how long do I need to be with Nedbank in order for me to be eligible to have this overdraft account?
Okay, our waiting period is that we just need one salary in your account. Okay. Once the salary has gone through once, then you are eligible that we can afford you an overdraft. However, there are elements where we do affordability test. Remember, we need to not to lend recklessly, so we do assessment on the clients, and once we see that the client is affording the overdraft, it is awarded to the client, and it is a solution that we encourage for clients who are disciplined, because it also needs discipline for an individual to work around it.
Okay, so let's talk about limits, and also let's talk about interest, because we know that anything that has to do with the transactions has interest. What is the limit, firstly, and what are the interests that you concur when you have the overdraft?
Okay, when it comes to overdraft, we afford our clients at prime plus 10%, which is the current rate that we award to our clients, and that is the interest that the client has to pay. But this interest that we're talking about, it's annually, it's not monthly. When we're saying you are going to be charged an interest of 10% plus prime, is through 12 months, it's not one month situation. And it depends on the balance that you have in account. Like, take for example, if you have an overdraft of 10,000, you will, and you've utilized only 5,000, you will not be charged the interest of 10,000. You will be charged the interest of the overdrawn amount, which is 5,000 at that point in time. So it gives you also an opportunity to manage your funds in that essence.
Okay, do I still, am I still eligible if I have a personal loan with the Nedbank? Do I still, am I still able to have an overdraft?
Yes, anyone who has any other facility in Nedbank, not limited to personal loan, even ABF and home loans, you are eligible to apply for an overdraft at Nedbank, and you can be awarded based on our affordability test. Okay,
so we know that overdrafts are useful, as if just highlighted and explained, but also they can be risky if you're not a disciplined customer. What guidance do you normally give your customers before applying and getting and using the overdraft?
Thank you for that question. As Nedbank, we have an obligation to provide financial literacy to our client. So when we are servicing our client, we share information around those lines, the importance of financial management, because we literally put all our clients under the financial journey of Nedbank, where we then share information to them, and they are in a position to understand how to manage their money.
Okay, so who's actually best suited to have this smart tool, Nkosi? Because as you said, it needs a disciplined customer, someone who knows how to maneuver with money. Who's actually best suited for this overdraft account?
I would say everyone who is a client at Nedbank is eligible to access this solution, and in terms of the fact that we don't give money recklessly, and then we engage the clients in terms of financial literacy, which then give us authority to say whosoever we afford this solution has been taken through and understand the importance of discipline. And then we will literally encourage financially literacy at Nedbank.
Okay, so as families navigate the back-to-school season, what steps should they take to ensure that this facility, the overdraft, still meets their needs?
Thank you for the question. Maybe just to add another light that we are currently running at Nedbank, we have clients whom we have literally done our assessment digital solution, where we share information to our client and say, you are eligible for an overdraft of 5,000, for example. And we're saying to those clients, if they are experiencing financial challenges, they can come through Nedbank. They don't need to go through the process of applying. Theirs is already ready for to be dispersed to them in a form. It's a pre-approved overdraft. For them, it's just to highlight to us to say they want the overdraft, and then if they are saying yes, they will get the overdraft within a short period of time. And with the clients that is at home who doesn't have the overdraft and has not received the SMS, we encourage that they come through to the bank if they are experiencing challenges in terms of financial strains, and then they can come through to us. We do the calculation, and then we will then award them the overdraft according to their affordability.
Okay, so your limit is determined by your salary and your loans.
Yes, I wouldn't say it is limited based on your loans. It is limited on our algorithm that we use to do the test, the assessment for overdraft facility and how much you can qualify for. The only solution you can get is when you come through at Nedbank, and then we can do the calculation at Nedbank, and then we can then give you verdict of the application in terms of has it been approved and how much has been approved on your overdraft.
Okay, because the technology has taken over our lives. We do everything online. Can I apply for this particular tool online, or I need to physically visit your branches?
Yes, you can access our website and you can literally apply there. There are teams behind who are already available to attend to any request at Nedbank, and anyone anywhere can access that platform, and we can use it, and we can be assured that in a short period of time you will be assisted in a way.
All right. Can I swipe anywhere in the country or even outside the country?
Yes, you can swipe anywhere in the world, not only not in Eswatini, in the world, including Eswatini.
All right. So lastly, Nkosi, before I let you go, contact details in case there's more information customers would like to ask.
Thank you very much, Mtombeni. My email address is malamini@nedbank.co.za, and my contact number is 7802-2819.
All right, thank you so much. Thank you for your time, Nkosi. Well, there you have it, the overdraft. But for more information, do contact Ndabula Dlamini from Manzini, or visit their social media pages, quite interactive, for the smart tool, the overdraft. Let's take a break, so we are going to match.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Hello to all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Mbabane. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. You're still watching Nedbank Business Watch, and now for the final segment of the show, which is the market analysis. I am joined by Bongani Mabuza, who is the head of treasury at Nedbank Eswatini, just to share insights on what's happening today. Bongani, good afternoon. Glad to have you in the studio. So news coming in from, or rather developments with regards to the war in Iran, is that the U.S. has drafted and sent at least 15-point plan just to see a ceasefire or a deal, bring peace and settle the conflict. What's perhaps the market sentiment around that so far?
Yeah, thanks, Eswatini Notsile. Good afternoon to you and good afternoon to your viewers. It's a real pleasure to be back here. I think it's a good point to start. The Iran conflict or war is still a big driver of markets right now. The U.S., as you rightfully say, has drafted a 15-point plan to see an end to the war, or to de-escalate the war. There is, at the moment, no sign that Iran will accept the terms. It is uncertain, and Iran, for the most part, has not confirmed that they will participate or going along with the plan. But markets are reacting positively on the back of the news that there seems to be a huge interest, at least in the part of the U.S., to see a de-escalation, even though on the ground you still see some escalation with Iran still being bombed, with Iran still bombing Israel, and the U.S. sending more troops to the region. But the sentiment is that there is an incentive to de-escalate, so markets are reacting positively to that.
This is rather a crisis that has led to the Brent crude trading at least 90 or over $100 per barrel. Now, the rising energy costs then may bring in the conversation on global growth. So allow me to throw this one in. We have so far seen reports of fuel shortages in Australia and also in the Philippines. These are just a few. And then, of course, a threat on jet fuel shortages. What are markets now looking at in terms of global growth? Let's look at how the equity sector is performing. What are markets really pricing in now?
Yeah, no, thanks. I mean, firstly, to put it into perspective, what the closure of the Strait of Hormuz means is a reduction in the supply of fuel that is going into the rest of the world, which necessarily means there is an increase in the price of fuel, but the shortages in supply are seen, as you say, mostly in Asian countries. Yeah. A few Asian countries, including Australia, including the Philippines and others. Some countries even announcing reduction in work hours in order to accommodate that. So what that means is that there's less production that is happening, which means there is less growth that is happening. To fully quantify that at the moment, because of the fluidity of the situation, may not be. It's a moving target, if I may word it that way. Yeah. But markets have reacted negatively to the conflict. You've seen, for instance, year to date, you asked about equities. The JSE All-Share Index is down about 4% year to date. The S&P 500 also down about 4% year to date. Even though you see on a day-to-day basis some movement, but that just shows that markets are discounting growth or growth prospects in equities this year.
Right, and moving on to commodities, well, we're actually looking at equities right now.
Yeah.
What do you think is driving this performance in the FTSE and the JSE All-Share Index?
Yeah, 100%. So the S&P 500 is down about just 0.4% for the day. But as I said, the 4% number is a year-to-date number. And this is really a reflection of the uncertainty that's a result of the war. But there's positives, and that's because the variances you're seeing here just because of differences in trading hours. So the FTSE 100 and the JSE All-Share Index are up just over 1% and just over 3% respectively. And that's because of the market sentiment around the talks with between the US, Israel, and Iran that are likely to take place, with Pakistan and Turkey being possible venues for those talks. So markets have reacted positively to that, and I think that is what's currently driving markets, and we'll see if this momentum has any legs to it.
Right, and in Asia, given that there's already reports of a shortfall in terms of fuel, what's the reading in terms of Asian stocks?
Yeah, the Asian stocks, to a large extent, have reacted negatively, but they've rebounded as a result of this. But you've seen Asian stocks still come under pressure. I mean, just yesterday, Tencent was down about 1.9%, and it's one of the largest stocks in China and within the region, and it's largely used as an indicator of where the rest of the tech sector in that market is going. But speaking of tech, there's other things that are driving those shares. I mean, in the US, the risks that come from the impact of artificial intelligence has largely affected technology stocks, with them being impacted more than others.
Right. With commodities in focus, what's the reading on Brent crude and gold?
Yeah. So crude was up about 1.9%, but this is, gold was up about 1.9% to just under $4,500 an ounce, and this is as markets await the outcome of these talks, if they do happen. And I mean, if you look at from an allocation perspective, you've seen a movement out of gold into Brent, and they tend to move inversely, with Brent being down about just over 4.5%, as a result of the sentiment that you might see a de-escalation of the war. And I think that's really what's driving markets at the moment.
And in terms of currencies, how are we looking?
Yeah, from a currency perspective, again, it's the same story. The Langeni versus the dollar is at 16.89, and that is down just over 2/3%. Versus the pound, it's relatively flat, and versus the euro, it's down just over 1/3%. Again, these are, I think, marginal movements that are. The markets are still just waiting the outcome of the news. But what would impact the rand flows is actually a story out of the rand equities, where you see a lot of stocks on the JSE being ex-dividend today, which means that from a price perspective they go down, which means that you're likely seeing sellers of those stocks, which would be net sellers of rand, so the rand would be impacted as a result of that.
Right. Before we wrap up, what's the anticipation on the interest rate decision by the SARB? There's an expectation of a decision later this week. How's that looking?
Yeah, that's right. The South African Reserve Bank is expected to have its secondary monetary policy committee meeting or decision announced tomorrow afternoon. The expectation is that there will be no change in interest rates.
Okay.
But that expectation was largely baked in. I think markets are really waiting to see what the language that the SARB is going to use is. And then closer to home on Friday, we expect the local Central Bank of Eswatini, the MPCC meeting, to also make a pronouncement on interest rates. The expectation there from markets is that we will also see interest rates remain unchanged. I mean, the big issue is still the war, and that it changes the inflation outlook. So what markets will be listening to is what the expectations from the regulators are in terms of inflation going forward.
Fair enough, Bongani. Thank you very much for your time. That was Bongani Mabuza, who is the head of Treasury at Nedbank Eswatini, just showing insights on the day's trade. Otherwise, this has been the weekly broadcast of Nedbank Business Watch. Thank you for your company. Until next time, bye-bye.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.
Msa